What are the differences between trading shares and spread betting?
Well, when you buy a share, you're actually purchasing the instrument in question, and you're effectively, owning the physical stock, even if there isn't such a thing as a physical stock. In contrast, when you place a spread bet, you're merely speculating on the price movements of the same instrument, which means you never actually own the physical stock, even if you are benefiting from its movements, be they up or down.
So what are the main benefits of spread betting over trading shares?
There are a huge number of benefits to do with spread betting. That might be leveraged market access, the ease in which you can trade on the move. You can also bet on falling or rising markets, which is something of a unique aspect of spread betting. However, one of the biggest benefits is to do with tax. Regular traders will be familiar with the capital gains tax. That's a tax on anything when you sell, give away, or otherwise dispose of something, and it applies to assets you own, be they shares or properties. The capital gains tax isn't currently applicable to spread betting, which means your profits aren't taxed when they would be on trading a share. However, that does mean any losses can't be offset against profits elsewhere. Similarly, the 0.5% stamp duty tax on any transactions when you're buying a share is also not applicable to spread betting.
So what are the risks associated with spread betting?
Well, whilst you can easily place, trades on a variety of different instruments, be they indices or companies or currency pairings, you never actually own the stock in question. There's also the chance that you might have to make fairly big margin payments at a short notice, and the main risk is probably the fact that you can lose more than your initial stake size.
Most people think of spread betting and CFDs as short-term trading instruments, but is it possible to trade the markets for a long-term period of time? For example, hold a long position for 18 months?
Yeah, well, you're absolutely right. Generally, spread bets are most useful for kind of a period of under a year. But there are scenarios where it is worthwhile holding it for longer than that. At Spreadex, we have futures products, which you can roll from quarter to quarter. Whether that is more beneficial than buying the shares outright is really a question for your own personal circumstances and your own kind of cost of capital. Where it can be very beneficial is on our commodities markets. And these are products you can't necessarily buy very easily in the underlying market. For instance, gold or corn, you can't just walk down the street and buy some gold. So if you want to take out a long-term position on the price of gold, spread betting can be very useful.